Okay, guys, we're just waiting for the last people to come in. There seems to be quite a lot joining us, so we'll leave it another minute or so, just so everybody that's trying to log in can get in. Okay, don't miss the start. For those of you just joining us, we're just giving it another minute or so, letting everybody who wants to come in join in. Okay, should we start then, James?
Let's go. Let's do it.
Okay, well, thank you everybody for coming to our June seminar. Some of you have already been on sort of the previous ones. I know it's been really helpful for people, so I'm glad we're able to. Excuse me. I'm glad we're able to keep these going. So yeah, what we're going to go through today is obviously a little bit about us for those people that haven't worked with us before, are relatively new to the process. And really the most important thing that we want to get across to you is obviously one really very easy strategy that you should be using. Everybody uses it. It's the strategy, we'll come to it in a little bit, but it's the strategy that everybody uses to make money in the UK property market. Who has a strategy? It's dead simple, and we'll show you how to go about that. So that's some interesting bits to come up. And we'll also talk about what's going on in the market, what's been happening last month, this year, effects of pandemics, Brexits, etc., etc. And then really, we'll finish with, here are the best options for you to be buying in the UK today, and why you should be buying them. Because again, we can back that up with all the data, the research, etc. As most of you know, I know we've got a lot of industry insiders here on the seminar, as well as some sort of first-time people, but we are an end-to-end solution, 360-degree solution in terms of doing exactly what you do, which is, or what you're trying to do potentially, which is find the right property. First and foremost, how we source it, but we're surveyors as a background, and valuers and all the rest of it within the company. We have people physically going to sites. And so, yeah, everything from sourcing, which we'll tell you a little bit about in a second, the due diligence, the data analytics, legals, mortgages, tax management, managing the property and selling it, letting you know when you should sell it, when to remortgage it, when your neighbour's getting slightly more rent, so you need to increase your rent, etc. But ultimately, we are just doing what you want to do, which is sourcing a project that, number one, is protects your cash invested. Excuse me, I'm getting a lot coming through. Number one, protects your cash that you've invested. Number two, makes you money, because almost everything in the UK has been making people money for the last 15 years. I think on average, you're sort of 3 to 4% growth per year, which if you imagine that's on a 30% deposit mortgage, you're tripling that. You know, you might be getting 12% a year just on picking any random property. So if we can work up ahead of that, you know, we're going to do really well for you. And that's what we've been doing for years. And we'll go through all of this now during the presentation. Just a little background on us. My name is Mark Pearson, as some of you know, and I have a background in training as a surveyor in the UK, and then working through different projects in terms of predominantly residential in the UK. Now I work globally with investors from funds, as well as first-time investors, first-time buy-to-let investors. So everyone from the sort of the professional all the way through to the first-time professional investor. Occasionally we will travel to actually do these seminars, but with the pandemic, we're less able to. And this is James.
Hello, everybody. I'm James Walsh, head of sales at Baron Cabot. From what Mark said so far, we will We will talk about strategy today and how you buy property. Something that you said a moment ago, Mark, that the UK market's so strong. It's quite difficult to go wrong in the UK market, but that's not what we're here for. We're here to go as right as possible with you. We'll talk you through. Again, I recognise some of the names actually have come onto the webinar. We've got first-time buyers, seasoned investors. People have different goals, different strategies, and that's what we do as a team. We sit down with you and we'll tell you more about what we've done as a business, how we operate as a business, how we find the locations, why we choose those locations, and why we invest ourselves into those locations, and also the developments that we are marketing and introducing you to. So yeah, on that point, do you mind if I take the lead on this, Mark?
Yeah, go for it.
Yeah, so we're talking about location and then about the developments that we have. So all the developments that we have and that we market, they go through a 112-point due diligence checklist. Doesn't matter who the developer is, if they're 30 years or 70 years. All the developments will go through this checklist, which will cover all the points, a lot of points you would never have dreamed of. So from planning permission, clients' funds, how they're protected, maybe it's cladding. We have to tick all these boxes on this 112-point checklist. So that's something that we came up with in 2018. Moving on to 2019, the companies that we partner with, we look for developers with a long track record, so we can see what they've built before, what they've delivered. Was it on time? And we can tell a lot. It's funny actually, when we're looking at data, we can predict a lot about market prices. When we look at historical data, we can predict a lot about the quality of a build when we look at past performance of a developer as well. And when we're looking at data, we use data analytics. So we still have 3 people that work for us full time. Some of you might remember us from Baron Cabot Research, where we're just a research company. We still have 3 people who work full time who are data analysts predicting property prices. We use machine learning to do this. And something that we say quite often is what we do as a business is exactly what you're doing. We find a good location that we're happy with to make an investment, and then we find a good property in that location. But we just do it on a much bigger scale, and we're doing it full time every day, and we're investing into these developments as well. And then we're asking you to. And then finally, on the point here, something that's new to us is a distress sales. So as well as having the options of some of the new houses or new apartments that we're bringing to the market, we do have a distress sales department, which is people looking for, well, you want to tell us a bit more about that, Mark?
Yeah, sure. I mean, just to run through your points again, yeah, the distress sales, it's a really exciting part of the business. It's one that at the moment we have a shortlist for. So you're welcome to join the shortlist, but it's not open to everybody. You have to go through a few little extra bits so we know that you've got the knowledge base to deal with distress sales. Everybody in the world thinks that I want distress sales, I want discounted property, but they come with risks, you know. So although we're getting stuff, yesterday we got a £470,000 house in North London, NW10, detached house. We've got it for £300,000. That's going out to an investor, right? So £320,000. We're just finishing on. Massive savings, hugely exciting, but obviously we had to send a valuer. We don't, there's parts of that property we don't know about. So in actual fact, as an investment strategy, it's not always as good as other ones or the traditional investment strategies, but it's a really, really nice string to our bow that we're adding in to clients. If you have some experience in that, please obviously get in touch with us privately, and we may be able to add you onto the short list, or you may at least be able to be on the waiting list so that if somebody comes off the short list, then you can come onto it. In terms of the data analytics, again, we've moved on a lot. So obviously initially we worked with University College London, and we've got these guys in-house. Imagine being able to predict now what a property is worth in 5 and 10 years, but be confident in those numbers because we can regress all the numbers. So you can pick any time, any year, and we can predict what that property price should have sold for. We're within sort of 1% of the pricing, and same with rental values. So this, again, we go back to the due diligence, that protects your investment. Data analytics means we are picking the right locations for you. That's as we'll go through the strategy soon, but to be able to do the strategy, you need the right data. We have that for you. So that's part of this comes into the values, which is complete confidence through clarity. That was something coined by one of our staff very, very early on in the business inception, which was we were constantly looking for ways to make what appears from the outside to a new investor is quite tricky, and obviously, a lot of money goes into it. And we wanted to show you, like, it's really straightforward. It can be really safe if you do the right things, and you get the confidence through clarity of, we've done the due diligence. If you want the due diligence, you can have it. If you just want to be comfortable that it's been done, then you've got us. I think we talk about it a lot. You can either, some people want to just drill a hole, other people want to know how a drill works, right? We can deal with either client. You want to know the due diligence, we can do it. Same with the data analytics. We have the market leading data. I do not believe there's anybody in the world with better data than us on the UK. We have this complete end-to-end service. So if you're an investor, 50% of our investors are international investors. Obviously, most people don't even go and see their property. 42% of those people come and repurchase from us. And that's because we've got this end-to-end service that the reality of it is, it's just super easy. You start making money immediately, and it's all looked after for you. You can be one of those guys that wants to be on the phone every day and finding out what's going on with the property, but you can leave it for 5 years and just collect the money out of your bank account, right? We have staff who are investing in themselves with real UK property backgrounds. Everybody, James, obviously our head from major developers in the UK, and a lot of the staff we are hiring from property backgrounds, not sort of sales backgrounds. So a lot of the guys you speak to on the phone, they're doing a full breakdown with you to understand what your needs are and then how that fits and what particular areas of the UK would fit your particular needs. These people are physically investing in property and also have a background, whether that's a sort of education background, working with developers, working on sites, contractors, etc. And we invest in what we sell. There's an awful lot of stuff where we have skin in the game, so to speak. We are a lot of the developments, we are part of the underwriting. So we are also saying, right, okay, well, this is great. We think this project's fantastic. We'll commit to underwriting the project, effectively putting a lot of money on the project, guaranteeing the purchase on all of the units, so we can get a bigger discount and pass that on to our clients. So again, if we share this sort of we share the risk, but we also share the upside, and we're doing that over and over again. I mean, sort of every day we're working 24 hours a day. The machines are working on the data analytics. 12 hours a day, our offices throughout the world are buzzing, and everybody's working on property day in, day out and being successful with it. And that's part of the team that, our clients become part of. We're an extension of them. In terms of our record, James, do you want to go through a little bit in terms of some of these?
Yeah. I think let's go on to Sheldon, yeah, because I think this is an example which is what we should look at here. So we have developments all over the UK. Manchester's been fantastic for us. Birmingham city centre as well has been a great area for us in the last 5 years. An area that you might not have heard of is actually Sheldon, which is just outside the city centre of Birmingham. If you drive into the airport or the NEC, Birmingham NEC Exhibition Centre, from Birmingham, you'll drive through Sheldon. And it's an area that's not really been on anyone's radar, but this is where we can look at what's going on in the area, cross-reference it with our data analytics, look at affordability in that area, and see there's a great opportunity. So we've worked on 3 developments from very credible developers on projects in Sheldon, and people that have bought here 3 years ago now, and on projects that have completed last year, have seen a massive uplift in capital growth. The property values have gone up 15% for those investments, at least. And the yields that are coming in now, conservatively, around 5% net rental yield. For some of you guys, some of these figures, rental yield I'm talking about is the rental income as an equation against the property price. So in London, you might get 2%, 3%. If you're getting 4% or more, that'd be a good rental yield. Here with Sheldon, we're getting well above 5% net. And this is something that's cost people for a one bedroom from around 130,000 to 150,000 pounds. So this is a prime example of where we can look at what's going on in the market. You know, Birmingham's gone from strength to strength. We've got Deutsche Bank, Goldman Sachs, HSBC. It's becoming a financial city. We've got HS2 coming. So we'll look at transport, education, healthcare. We'll look at the demographics of the renter. Who's going to rent this property out? So yes, early investors who've bought in Sheldon, which is something that, you know, the obvious when people are looking at the UK recent years, we're like, okay, London's expensive. What else is there? Let's buy in Manchester. And that's great. You know, you'll do okay in Manchester. But again, we're not here to do okay. You need to maximize your profits. In 5 years, you want to be remortgaging that property and buying another one, not in the year 7, not in year 8. You want to do that as quickly as possible, build a credible portfolio and get your capital working as best we can. We've moved on from Sheldon. Now there's other areas, and we'll move on to some of those later on, but Sheldon is where we focused on in 2018, 2019, and some of 2020. Now we've moved on to other areas which have that. So it's interesting when you're comparing an area like Sheldon to Birmingham City Centre, and we have to take a step back and we have to tell people our methods, what we're going through. And then Mark mentioned earlier, 40% of our investors are repeat business because they've made money. So people that have bought in a development that we've delivered with a developer in Sheldon are now looking at the next place. They've got faith in the process. But we back this up. We back this up, and the job of the guys here is to talk you through that in as much detail as we can, or as little detail as you need. Again, 360-degree service. If you want it, it's there.
Yeah.
You want to move on to?
Yeah, I was just going to say Sheldon was it wasn't a glamorous spot, was it? You know, sort of, it was a prime example of us, because the data knows, and we know, that there was growth, there was people's salaries were going up. So, and then there was a tram line. So we looked at it, and you know, there's a new transport link going all the way through Sheldon. It was going on the map of Birmingham, where previously you had to drive into the city centre or get the bus. Now you're going to get this amazing tram, right? So that was exactly why it became really important. Is what an important spot for us to be investing in and helping our clients invest. Most of them had never heard of Sheldon. I think that was just a great example there you gave us, James, and is one of the ones we could definitely put down as a huge win. And that's
similarities.
Yeah. Do you want me to lead on Ashford?
So we were going to say similarities, weren't we, with Ashford because of the transport links.
Both excited to go through it.
And another area. So I mean, again, Ashford is something that's been on people's radar for a long time as a London commuter town. We've seen dozens, not dozens, but Bracknell, Luton, Reading is London commuter towns, areas in Essex, which property values have been increasing because of the commuter time. Ashford has been on our radar, and there's been certain triggers for us to move into Ashford. So again, Ashford in Kent, if you're driving to London, an hour and a half, but on the HS1, you can be in St Pancras in 36 minutes, Waterloo in 50 minutes, Paddington in 55 minutes. The property price in Ashford, though, 2-bedroom, you know, in our development, you're looking at £300,000, 260 to 320, a 1-bedroom at 200,000. So you've got massive gains here. The bit of a different investment strategy here, where we've got people that are more focused on capital growth as well as a rental yield. Sheldon, we had great rental yields, little capital outlay. I think another one is we've seen that the development that we have is from a developer that we've worked with on 3 other projects called Elevate, delivered high quality, and it's handing over now. So it's not just off plan. We work on projects which are about to hand over or recently handed over. Another massive feature for Ashford is that you've got the Eurostar, which takes you to Paris in an hour and 50 minutes. So consequently, as it's more affordable for businesses to set up here, you've seen a £300 million film studios going through planning, and that will be ready 2023. So Netflix, Amazon, and HBO will be building a film studios here, making it their home. We've got more developments coming on now, and the developments that we're seeing come onto the market, which will be ready in a couple of years, the prices are higher. It's the same with Sheldon. One of the projects that we were working on is a second phase, and the 1-bedrooms in Sheldon, which were around 140, are now starting at 160, 170 on that second phase. So we got into that at the right time. Ashford's another one where we are right in Ashford, Kent, at the perfect time. Couldn't be a better time to be investing in this commuter town, London commuter town.
Yeah. And I think with both of them, it's amazing that, like Sheldon, as an example, the new Marks and Spencer's food opened there. And they've got this thing in the UK, and they call it the Waitrose effect. Basically, when a new posh luxury supermarket moves into an area, they say the property prices go up. It's wrong. What it is the property prices are going up, and these clever guys at Marks and Spencer's and Waitrose see that the demographics improving, so they invest there, right? And people are amazed. Oh, there's a new Waitrose or Marks and Spencer's next to the development you built, and we go, yeah, we know, because these people are looking at the same as us. You know, they've got the same researchers that we do. Marks and Spencer's have seen in Sheldon, look, this place, people's wages are going up, demographic looks great. In the next 5 years, people are going to be very, wealthy in this area or in and around this area. Let's put one here. Ashford's going to be the same, absolutely the same. And for the same reasons, it's an absolute bargain, really, Ashford. You're buying at sort of some sort of tier 2 Manchester pricing, and you're able to buy in Manchester. So in Ashford, sorry. So really, really good one. Just quickly, and you can get copies of all of these reports. We can give you copies of every single property that we worked on, how much money that made. Just ask us for them. All of this is really open because we've done so well. Our track record speaks for itself. Other notable ones, Preston, we've invested in developments completing now. Again, did incredibly well, sold super quick. The next phase of it is an extra £25,000. So all of our clients that bought in there, we're buying at 110, 115, 120, depending on where exactly it was in the property. Well, now, they've already really made 20 grand because it's the same product as next door, and £20,000 more. So a lot of these people put down 25, 30,000 pounds, 20 grand already uplift. In a year or two, you can remortgage and realize that out. Maybe 2 years, some of these clients can remortgage and take out the cash that they invested. So they've got property that they didn't invest any cash in with someone else paying the mortgage. It's fantastic. Manchester Central and Tier 2, a place very close to your heart, James.
Yep, Manchester. Just quickly, there's 3 case studies there that was mentioned. So Sheldon, an area in the West Midlands near Birmingham, Ashford, a town in Kent, and Preston as well, where we've operated with developers and either maybe the same developer or a new developer is building near to where we sold property or a second phase, and with a much higher price tag. So people that have bought in those areas are very happy, and that's why they're choosing to do repeat business with Baron Cabot. We'll remortgage the properties for you as well. We'll guide you through that so you can release equity and buy into another property. That's our goal, really. I say to a lot of clients, like, I'm interviewing, or we're interviewing to be your property people that you can come to. And once you've been through the process once, that we're using machine learning. I don't know of any other companies like us who are using machine learning to the extent that we do in data analytics, as well as all the property reports, as well as looking at a new transport link and supply and demand to find a location. And I don't know anybody else who's doing the 112-point due diligence checklist before we recommend that development. Going through that. So Manchester Central, we've done exceptionally well from Central Manchester with developments. We still have developments there. We're now looking at Tier 2, where we feel that there's a better opportunity. There really is less capital, same growth, and in some cases a higher rental yield to buy property. And when we say Tier 2 areas, Manchester. If you don't know Manchester, well, maybe London. London, we have zone 1, 2, 3, all the way to zone 7. Manchester, and I can say this because I'm from Manchester, was very much a zone 1, and then as you come out of the city, it drop off, and it wasn't, some very tired looking areas to a zone 5. But those areas we want to buy into because they've got more potential. If Manchester's a dartboard and you're looking at the red in the dartboard, that's a safe bet. It's going to rent out. It's desirable. But that slightly that part outside the green on that bullseye is where we've got projects now, which will be, and that's funnily enough, we've got 3 projects right now that we're happy with. We're happy with everything, but they've not passed the diligence. They will, and once they do, then you'll see them on our website. Then you'll get the emails from us. Then we'll start talking about them. But right now, we're very close. I'd say we're probably 2 weeks away, Mark, from 3 new projects in Tier 2 Manchester. Yeah,
we'll do that. We'll come to that on the new projects, on the upcoming launches.
Yeah, Central London. Yeah, exactly. Central London. You know, that's like a different country altogether with Central London. We've got a handful of projects, and whilst there are investment cases for regional cities and commuter towns, the projects that we've got are different to what you'll see in Central London. They're very, very different. So if you are set on Central London, speak to us after this. I'll go through a couple of projects that we have, which you won't have seen, which are very different to anything else that you're seeing in the regional cities. And then lastly, Liverpool Waterfront. We've got a landmark building we're working with. It's called Tobacco Warehouse. It used to be a warehouse, and they were making tobacco in there as a factory. The largest brick building in Europe. One of the most beautiful projects we've got. And Liverpool Waterfront is an area where there's a 10, 20 and 30-year plan. And that's a different strategy for somebody else. They may want a 20, 30-year strategy. Someone else might want a 5-year plan. And we've got developments which will sit within those strategies. And last year we were involved in over £100 million worth of transactions. So that's the scope of the transactions we're doing as a business worldwide.
Yeah. And I think it's just important to note that, again, from a strategy perspective, we look at market trends, etc. But the strategy for you guys should always be the same. It's really simple strategy, and it's the strategy that everybody before us made money with, right? All the way through to back to Genesis, right? Everyone did the same thing, and that is find areas whereby the salary is growing, you know, affordability is growing, therefore housing prices can grow. There's an undersupply of property, therefore people will bid on properties, and there's plenty of mortgages available. If you then add to that stuff like this, you know, transport links, right? And if you're near a transport link or a transport link's about to be built, you're going to make money. Or like that, you know, everybody historically has made money. There's no guarantees in property, but if you only had one strategy, that should be it, right? And I think certainly novice investors have a habit of overcomplicating it, thinking that, you know, we need to look at this, and this, right? Just because Manchester's doing well, just because Birmingham's doing well, it doesn't mean all of Manchester's going to do well. So don't. If you go, right, I'm going to invest in Manchester, let's find the cheapest property in Manchester. It's probably not going to do that well, because the cheapest property in Manchester is probably in the worst part of Manchester, some ghetto that maybe hasn't got any chance of growth, right? Because Manchester is going to grow at 29% over the next 5 years. Some areas will grow at 10. Some areas might grow at 40, right? We're talking averages. You know, just because the UK is going to grow at 21%, it doesn't mean that every single place in the UK is, right? So it's really important to work on these strategies. And what the beauty of what we do and the beauty of what we help people with is the strategy should always be the same, right? Really, I think everybody uses that strategy in fairness. And, you know, if you don't, then just look at it and have a conversation with us. The tricky bit is getting the right information, so you know where those places are. Where are the new tram stops going to be? Where are the new train station or rail stations going to be in the UK? And of those places, which ones are seeing growth in people's salaries? Which ones are seeing a very, very high occupancy rate? There's no apartments available or houses available to rent or buy, right? It's so low that, you know, we need more stock there. There's a massive undersupply, etc., etc. Finding that information, and then within that, looking at, for you as an individual, which ones of those are within your budget. So it might be we've got these spots all over the UK, and 3 of those spots work within your budget, right? Where we can get the right property, and a property here, as you can see, you know, that has outdoor space, right? Because post-COVID, people don't want to be cooped up in a small place where they've got no outdoor space, right? So you need a roof garden, outdoor space, or within walking distance of a park, something like that, right? That's important. You need to be near mortgage links. You need to be near transport links. So I was reading the slide there and thought myself, need to be near transport links, right? We need to walk to a transport link, and even better, we want to buy somewhere where a transport link's about to be built, because then we get to take the growth out of that. So I think it's just really important that it's simple. It's really, really simple strategy, but the complexity is the work that we do in the background. Going, this building, to all intents and purposes, is very, very safe. We've gone through it all. This is why we keep winning on all of our projects. It's because we're just doing a simple strategy, but doing loads and loads of work in the background on making sure that these little areas are all performing well. And also each building goes through our due diligence checklist, which James referenced before, which I think is basically this slide, actually. In fairness, I think it's just referencing the fiscal locations. And yeah, there's a point here as well, just to make, is that I think if you're thinking of buying now, and you've been thinking of buying for the last 5 years, you've been through some different cycles. We had Brexit, and that's when, you know, property prices were really slow. You know, growth was slow. And, you know, we still got growth. We got growth through the pandemic. It's incredible because it's UK property globally is seen as just the most incredibly safe investment spot for people's money. You know, bonds are completely dead at the moment. So if you want a safe investment, it's pretty much UK property. But if you didn't invest during the Brexit when it's the prices were low and slow, and then you didn't invest now when it's booming, when are you going to invest? And I think it's really important that I think a lot of people, most of the time, if you just invested at any time in the last 5 years, you would have made money. And I think it's important to sort of not try and time the market, just get in the market. You know, time in the market is better than timing the market, I think is the saying, isn't it? But I think it's really important just to be true to yourself, that just getting with the right people like ourselves, investing, get moving. You know, that's the really important part, because if you didn't invest 3 years ago with the Brexit piece when it was, you know, slow and you could have got something a little bit cheaper, and now you're not investing, you know, where the trend's going the right way, everything's looking good. The Bank of England is telling us that, you know, they've changed all their expectations to much higher. All the banks are lending really well. The mortgage rates are really low, but the market's flying. You know, if you're not investing now, then you've got to question whether how active or how much you really want to get into the market. James, this is the Savills stuff, if you want to go through that.
Yeah, from some of the points you've mentioned there, undersupply, and we can look at Savills, who are one of the world's biggest consultancy firms, and they're very good at predicting property prices. So this is where we can cross-reference our data analytics with what the industry experts, who are much bigger corporations than us, the likes of Savills, Knight Frank, Jones Lang LaSalle, that you would find out in the domain. So the areas that we're going to be focusing are, you know, yes, we're in the Northwest, 28.8% over the next 5 years, but where in the Northwest, where are we going to get that? That's an average. That's an average in the Northwest. Which area is going to bring that average down? Which area is going to bring that average up? We look at, you know, a lot's changed. You mentioned, referenced COVID before. We're building now developments which are towards tenants. In fact, you know what, I'll save that because we're going to go on to a few projects in a moment, aren't we? And we'll have a video walkthrough, and I'll show you some of those. But yeah, so we look at what other people are saying as well in the marketplace. We look at dozens of reports, financial reports. We compare property to different investments. You referenced bonds before. So essentially, we're collecting as much data as we can. We've got 3 people who do this full time for us, and we cross-reference that with our own research. And this is too much that you can do on your own. You speak to people all the time that wherever they live in the UK, they'll buy something local to them because they know that market. The whole of the UK is undersupplied. It's Savills, actually, which said the UK population will rise to 74 million people in the next 20 years. Wherever you buy property in the UK, it's undersupplied. Don't just buy somewhere local to you, make some money from it, and think, well, that strategy worked, I'll do it again. Do some homework, do some research. You'll make a lot more money in other areas of other cities. I can't stress that enough. Yeah,
and I think what we're seeing, I think our data is probably more advanced than this, in truth. But what it does show is that, you know, I think there's agreement in the market. There's, you know, most of these people who are just trying to get the best data out there are seeing the same results coming. That, you know, there's growth here. And again, just this other image here just gives you a little bit of flavor as to pre-COVID, what people are looking for, and now after COVID. You can see things like parks and open space has shot up. You know, this is important. Find developments where there's sort of communities, you know, like sort of these are the ones that are going to be do really well moving forward. Communities, shops, local amenities, that sort of thing. Within and ideally within, you know, if you can get somewhere where you've got office space. Some of our buildings now we're building with office space, and so people can work from home. You can see here that even the transport links has reduced a bit, because I think people are expecting to be working from home a lot more. So bear these things in mind. We can share some of this information with you as well.
Yeah, just lastly, just a very small
sorry.
point on that point, and on that last slide, when we've got all the areas of the UK, that's a really customer friendly report from Savills, which you read that report and you'll go, yeah, UK market's looking really good. I'm doing the right thing, and that's also for international investors. So we've got office in London, Dubai, Hong Kong, and other areas, satellite offices, and we could send that to somebody who's just started looking at the UK that doesn't know the UK market. Our data is a hell of a lot more advanced than that. We don't want to give too much away, Mark, on what we do, but we dissect the whole of the UK by local authority, by postcode, when we're looking at property prices. So we can hone in really specific locations.
Yeah.
That was all. Thank you.
Yeah, absolutely. So obviously some of the bits that you've been excited for, I know a lot of people have been asking. These are some of the projects we have at the moment. Some of the newer projects. There is quite a lot outside of this which we can't advertise, right, for various reasons. Some of them are just small ones that we don't need to advertise, so we'll sell them. If you're already a client of ours, we'll let you have this sort of first opportunity with. But equally, so come and speak to us, to get a real in-depth, but a flavour of some of the opportunities we've got here. Things like this one. Let's turn the sound off on that. Do you want to go through Tobacco Warehouse, James? You explained it quite well.
When you were in Tobacco Warehouse last year, weren't you, Mark?
Yes.
You visited this site. Yeah, I've not actually visited here, but what I like about this design is it's kept all the original features. It's a listed building. So you see the wrought iron staircases, the concrete pillars, the brickwork, which is it's famous for, that open brickwork. We've seen a lot of that in the Manchester warehouses. And these are massive 2-bedroom duplex apartments, ocean views. It's arguably aesthetically the nicest development we have, and this is on Liverpool Waters. So there's a 30-year plan for Liverpool Waters. Your 10-minute walk to where all the main bars, shops, restaurants are. Actually, a 5-10-minute walk the other direction, you'd be where Everton's new stadium is going to be. Again, that's going to spike property prices. It's going to inject a lot of life into that part of Liverpool Waters itself. Yeah, we can move on to the next project as well, because we've got
this, and again, that is, I'd say it's probably the most beautiful project in the Northwest. I don't think there's anything that's coming close to that at the moment at all. It really is. It's a labour of love, that project. This one here is a really interesting one. Again, for you guys that are trying to take advantage of the transport links, like you should be. This is Digbeth. It's next to where the HS2 is going to be. So we're building the HS2 at the moment. And so we're investing in an area of Birmingham whereby average price per square foot is cheaper than some of the other very, very central locations. This is incredibly central. It's just behind the train station, just immediately behind the Bull Ring. I'll just keep on that stat for a minute, just so you can see exactly where it is and why it's so important. And then, you've got this new Smithfield master plan, which is humongous. It's going to bring huge amounts of money into this area. And it's not like this area we're thinking about this is going to be something massive in the future. This area was already voted the coolest place to live, the trendiest place to be by the Times, ahead of places in London, Bristol, everywhere. So you're buying cheaper, and yet everybody wants to live here. It's going to have a new HS2 station, so everyone can get 45 minutes into London. And yet we're buying slightly cheaper than other parts of Birmingham city centre. And yet it is city centre, just an area that hadn't been, as sort of utilised or as much building on. So this is a great building. One of a few we have in this area. We've got another one as well coming in. But this one's a really good one for you to look at. I think it's one that a lot of smart investors are going for, taking advantage of this little area of Birmingham, maximising it now, much like the northern quarter in Manchester. Various areas of the UK that we've been sort of taking advantage of. So I'll skip that again for you there, James. And there you go. There's Broadoaks for you.
Yeah, Broadoaks, Solihull. So if you know Solihull, this is the nicest area in the West Midlands to live. It's where a lot of the footballers that play for the Birmingham football clubs would choose to live. And we've got a development here, you can see right next to the train station, well timed. Solihull, yeah, very desirable place, very leafy, very green, 25 minutes from the city centre. It's actually south of Sheldon on a map. So Sheldon's the other area that we mentioned to you. So we wouldn't just do something in Solihull for the sake of that, but we've got an opportunity where the development's passed our diligence, flew through, it's completed. This is not, this is a walkthrough of a completed apartment. This is a very high rental yield, very high, and the property prices here for what we have available. It's actually available now. We sold 3 this week on this project because of the high rental yield, and prices starting from £175,000. You can achieve 7% net. That's the highest rental yield I've ever worked on for residential property. It's actually high. Student property is typically higher. A lot of people buy student property just for the yield, not much capital growth. And there you'd look at maybe 6.5 to 8% net rental yield on student property. This is not student. You can mortgage this. It's residential. So 175, let's say 180, 190, give you more choice. It's a great entry price for a high rental yield, which will more than cover your mortgage. Can we go on to Salford Keys, Mark?
Sorry, yeah, it skipped on there. So yeah, we've got other sort of projects. We have a load of stuff. So not just Salford Keys, actually, we've got Cambridge coming on, which will be launched next week. Really, we're just going through getting some of the imagery right for it, so people can see a bit better what they're buying. We've got Nottingham coming on. We've got Trafford in Manchester coming on. And we have Salford Keys, 2 Salford Keys developments coming on as well, which are obviously really, really good. These are getting some really good price points here. Salford Keys obviously is where the BBC is, where we've got, it's a really interesting part of the city, and somewhere that a lot of people want to invest. Again, Manchester's turned into one of those really safe cities. It used to be 15 years ago, London was a safe city. Other places were sort of your regional areas, and people weren't that interested. Then Manchester became massive. The tram system in Manchester, much like what's being built now in Birmingham, the tram system pulled the whole city together. And the northern powerhouse, really, the capital of the northern powerhouse is Manchester. And I think most countries, international investors love it. Local investors love it. Yeah, I think you can't really miss with a well-priced Manchester property. This again goes into James's tier 2 again. So some of this is tier 1 that we're working with, but a lot of tier 2. There's a lot of luxury being delivered into Manchester. So if we can find ourselves at the sort of the upper or luxury finish without a luxury price tag, that's where we're trying to invest at the moment, and we can back that up with sort of vacancy rates, what people are demanding in Manchester, various sort of what tenants are asking for at the moment is what we've been able to deliver in. We do have the luxury sector, city centre, but I think these are some really good investment opportunities for most people. Looking at in and around sort of 200 to 300,000. We've got some stuff 150,000 just outside of here. So anywhere in between that, it fits most people's budgets. Okay. So again, all of these locations have been picked for the same reasons. They're fitting into the criteria that we need to get, which is they're going to grow in value, the rentals are going to grow, and our properties go like this because they're in locations that are allowing them to do that. Our goal, as always, and always has been from the start, is to pick projects where whatever you invest in day 1, we can double that by year 5. And obviously some of the stuff could be year 2 and 3, but that's our goal when we're looking at projects. That's what we have to do, and that's where we need to. That's really our project focus. As James said, probably 95+% of developments we look at, we reject, right? And there's reasons behind that. And individual properties, we reject them. There's reasons, and it's because they're either overpriced, They're not going to, the vacancy rates, you know, there's too much availability in an area, etc., etc. So again, it's really important for us to be able to speak to you and go through all of this information, understand your needs, so we can start showing you not only the areas we think you should look at, but also the areas that have been disregarded, the developments that we're looking at, and the developments that we can get you because we're an independent company, but here's why we've disregarded those. Okay.
Yeah, so we're just summarising. We've picked up on a lot of this has been a theme in some of the locations and how we choose those locations. So HS2 transport links there before have Birmingham. They'll get HS2 by 2026. London commuter towns, mentioned Ashford, which have the high-speed network rail, and then the Manchester Tier 2, so looking around the tram stations and what's going on around those certain tram stops and why. Affordable, and cross-referencing everything with our own data as well.
Yeah, exactly. So we're on to questions, James. Hopefully that was that went well for everybody. Hopefully the sound was better. There's a few complaints about my sound last on the last seminar. So I know after listening back to it, yeah, apologies about that. Obviously, when we're live, it's very difficult to be able to pick up on some of these things. And I think we're getting better each seminar we do.
We thought we were getting a few questions fired in, but it was actually people saying, "Can you turn the volume up?" or "Can you adjust your microphone?" It wasn't dozens of questions about where shall I buy, what shall I do, what are the do's and don'ts, all the questions we were excited about, but it's actually just use your microphone on.
Yeah, exactly. But talking of questions, here's one here. So we've got one. The first question is obviously investment costs. So what goes into it? What is the cost of investing in property? So predominantly, if you're an international investor, you'll normally put down 30% on a mortgage. There's no hard and fast rule. You can put down less, you can put down more. So you put down 30%. Your upfront costs are going to be solicitors, maybe £1,000, maybe £1,200. Mortgage brokers, if we use a mortgage broker, maybe £700 to £1,200. Stamp duty. So at the moment, obviously, if you come in and buy something that we're completing now, you're going to save on your stamp duty massive amount. But equally, you know, stamp duty would be there. So that's really your upfront cost. I don't think I've missed anything there, have I, James?
No,
maybe a finder's fee for a tenant, couple £100.
Perhaps.
Nothing much.
Yeah, perhaps.
And then sort of your ongoing costs are almost all of our developments, other than very, very central London. Everything we have will cover your mortgage. One thing that a lot of people don't know, and I know we've got a lot of international clients on here, is that no matter where you live, there's a chance, most likely will get your mortgage. The most obscure, you know, sort of places and obscure jobs and people, you know, roles we've been able to get mortgages for. So no matter where you are, get in contact with us. We'll just do a quick mortgage check before we even look at property with you. We'll check you can get mortgage on it, and then we can go ahead. You got any questions there, James?
Someone's asking, can we send a copy of this? Yeah, we can send this if you want to email us any questions as well. It's james@baroncabot.com. Same for Mark. It's mark@baroncabot.com. So if you want any questions or you want us to email this to you, then absolutely fine. We'll email this recording over to you and the presentation. What we do as a business every day is we'll sit down with people on a Zoom call like this, and we'll talk about your goals. If you've not got a strategy, we can put one together, and we'll start making recommendations for you. The cost that Mark mentioned, we can do this on every single property for somebody. So we'll tell you for you, what mortgage. We'll look at getting a mortgage. We'll find out if you can get a mortgage. I'm sure we can find one for you. We're very good at that. And then also what rate you have. We can work out what the rent's going to be, and we'll show you why that rent will be, what that rent will be, and how much money you're going to make. And part of that cash flow analysis is actually all the startup costs. So it's not just the money into the property, but what are those buying costs, those setup costs. And then we'll work it through year 1 to year 5 to 10 years. We'll do a projection for you.
Yeah, and it's a good point. So, and we don't charge. So if you come and sit with us, you're not going to have to be paying us a fee or anything like that. And we'll go through sort of all that with you. But don't be concerned about sitting with us. You're not going to, you're not going to have to pay us anything for that. And yeah, very, very importantly is when you sit on a Zoom with me or James or any of the other staff, nobody's going to sit there and try and sell you a property, because on the first call, nobody knows what's suitable for you. You know, you might have your criteria, your hopes, your needs, your beliefs, you know, the difference between someone that wants to flip a property before it completes, somebody that wants to complete a property that they want to keep until their pension. These are different, very, even postcodes of the UK, or, you know, small areas, 1 kilometre squared areas of the UK will act very differently. One will give you a really high rental yield. Another area will give you a higher overall return. And so it's always different. And so and even just sitting with us and getting that knowledge set, I think is hugely beneficial. And I don't think we've had somebody that sat with us and not thought, well, that's fantastic. You know, what a piece of information. I know there's other people out there that because other companies aren't independent, because other companies just have 3 products to sell, there might be a developer or what have you, they're going to shoehorn you into whatever one it is, right? For us, we're different. We don't need to do that, because we have thousands of properties we work with. We have systems whereby our staff can work through with you, start to pull out the types of things that look suitable and start sharing those with you. And hopefully what we believe is suitable for you, you also believe is suitable, and we work together, we do business. And then more hopefully, really that first transaction is just the first transaction. Then we start working together. After that first transaction, that's when you come back, and that's when we make, you know, that's when we really start making sort of business relationships together. And really that's where we want to get to. And really that's very, very important to Baron Cabot, and always has been.
Yeah, I said get in touch. Right, I hope you can tell, or we've conveyed this, that me and Mark and everyone here, actually, we love what we do. Yeah. We love property. We love talking to people about property. We like educating people on what we do. We're really breaking new ground with this data analytics that we have, that we keep referring back to. We love sharing that information with people and helping them. If you've got a portfolio and you're not sure, can you remortgage? We'll assess that for you. We'll have a look at what you've bought. We can do that with you know, no strings attached. So get in contact with us, speak to us, get to know us. If you visit any one of our offices, there's always a buzz about the place. It's a buzz around out. It's a good time. It's a really good time. We've come through the pandemic. Property prices have increased. We're getting through Brexit. For us personally, we need new stock. We're selling. We've got some very exciting new projects coming as well in up and coming areas. Well, they're always up and coming areas, but yeah, it's a really good time. So get in contact with us. Don't be a stranger. Reach out. It'd be great to talk to you. And for us also to learn. We all enjoy learning about what you do. This is what we do. We feedback from what our investors are asking for and looking at and finding out there as well. We learn from you as well.
Okay. Right. Well, on that note, thank you all very much for your time. I hope.
Yeah. Thank you very much, guys.
We've got, I think, five spaces each, James. So anybody, first come, first serve. If you want to speak to myself or James directly, you know, and get more information, we have, you know, just get straight in, send us an email, mark@baroncabot.com or james@baroncabot.com. We'll get you booked in. We don't have a space, obviously, for everybody. You know, 100, you know, would be here sort of 24 hours a day, but we certainly, for the first 10 people, we can make some space. And anybody else needs a copy of it, you know, please feel free to ask us. Thank you very much.
Thanks, guys. Thank you.
Cheers, guys. Bye-bye.